There's no reason to take to the sky without being adequately prepared with cozy layers. Or in other words, don't set ambitious goals if you don't want to work towards them. That's what analysts across the board are saying as far as China's growth target of around 5% is concerned for 2024. So just why are analysts saying China's economic goals are unreasonable, and what is going wrong for China's economy? Well, turns out a lot is. To begin with, China's property market has been stuck in doldrums, and here's how. There's been a glut of unfinished properties and worried home buyers. What has this done? This has eroded public confidence in home buying and in general. In January, China launched a whitelist mechanism asking state banks to boost lending to certain approved residential projects. However, that's just added to China's high debt dilemma. Remember, China's debt to GDP ratio climbed to a record high in 2023 despite the slow pace of borrowing, reflecting the economy's weakening growth. And so what happens after this when the world knows that China's unwell? Well, foreign direct investments or FDI slide. In 2023, FDI was down 80% from the previous year, and this shows just how hesitant people and companies are to invest in China now. So just what is this lack of confidence doing then? It is making foreign investors flee the Chinese stock markets rapidly and massively. Experts believe this will not only make the Chinese stock market more volatile, but could also be a breaking point or the last straw for many investors. And going forward, the chaos is not just limited to the stock markets in China. It has also reflected in demand remaining consistently weak. While official data shows China's youth unemployment is around 15% at the end of 2023, some economists believe this data may not be reflecting the harsh reality of China's unemployment, and the actual data for the number of youth without jobs may be sharply higher. While some other economists believe that slowing growth and a weakening economy aren't reasons alone for this unemployment data. They believe when a country's working age population declines, the effects of high youth unemployment remain long after, and this may be the case because of China's aging population as well. China's aging population also threatens key Beijing policy goals for the coming decade. There's just one silver lining to this worrisome mix: China's persistent deflation, which has been the longest streak since the Asian financial crisis in the late 1990s. However, deflation in China could aid near-term global disinflation. And this is interesting as declining export prices out of China translate into lower import prices for trading partner countries. But China's rising regional tensions, such as those with the US and Asian neighbors in particular, will add to volatility and inconsistency both for policies and stock markets. Lastly, China's vow to secrecy seems to be way deeper than the country's vow to its growth goals. China's decision to scrap the premier's post-parliament news conference, a tradition that was followed for at least 3 decades, hasn't gone down well with experts. They believe this reflects further centralization of power in China and a sense of paranoia within the top leadership as well as the rise of dissent towards them.